Hello everyone. In today's video, we are going to be setting our sights on the US oil spot for the upcoming week. Recent news from Saudi Arabia and Russia extending a voluntary oil output cut has driven oil prices up by more than 14% in July compared to the month of June. The question on everyone's mind at this juncture is, will this momentum continue? Well, let's find out together as we dissect the current market structure through a comprehensive technical analysis. Before we begin, I want to emphasize that this video is for educational purposes only and not a financial advice. The forex market carries inherent risk, so always trade cautiously and consider seeking guidance from a professional financial advisor before making any investment decisions. In preparation for the week ahead, I have conducted a comprehensive price action based technical analysis. And of course, we will be using simple parameters such as trend lines, key levels, and of course, chart patterns to gain valuable insight into the current US oil market. Well, last week's trading setup provided fantastic opportunities with approximately over 1,000 pips in profit as we took advantage of both buying and selling opportunities. Well, the first half of the week was more of buying. During the midweek, we begin to see some bearish traction, which we, of course, took advantage of. And while during the later part of the week, we took advantage of another phenomenal bullish momentum. If you are interested in reviewing this commentary for educational purposes, you can find the link in the description box below or at the top right hand side of your screen if you are watching from my YouTube channel. Now that we have our groundwork laid, let's dive right into the business. I have a very simple setup here. There is nothing too complicated on this chart right here. So our center of focus today will be on the 4 hours time frame. So on the 4 hours time frame, what I did here was to take into consideration the nature of price action since the beginning of the month of July. And in fact, it's quite obvious that price action is very bullish. And to further emphasize the strength of the buyers in this market, I was able to connect the series of higher lows, as you will see here, giving us an ascending trend line to work with. And if we zoom into the current structure, that is, if we take into consideration the nature of price action since the month of July, we can see that price has finally broken out of that our key level for last week, situated at the $80 mark. And of course, this is the platform that OPEC's members want price to be as a support line to drive more higher highs in this particular market. Now we have seen a situation here where price has did a breakout of the $82 level, which for me is going to be serving as my key level for this week. And depending on how price action reacts with this key level, will determine what our next line of action will be. And for those who have been with me in this community for a while now, you know how we use our key level. If price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying, while a breakdown of the key level will welcome um, opportunities to look out for selling potential. We have a breakout already. And the question at this juncture in the market is, will this breakout continue to the upside, or will this turn out to be a false breakout? So what I'm going to be doing here during the new week is to see how the market will react to the structure to determine what my next line of action will be. And one of the scenarios I'm going to be looking at is the first one here, considering this sharp rejection of that $82.90 level. As you will see, we have a shooter star candle here, which from a technical standpoint reveals the presence of sellers. So if we are going to be taking this into consideration, we might likely see price drop below the $82 level, where continued selling pressure below the structure could incite a sell-off, where the breakdown of that ascending trend line for the first time in the last 4, 5, 6 weeks now could be a very good signal to join a sell-off in this market. However, if instead of breaking down the trend line, we begin to see buy pressure resume above the ascending trend line, then we will get ready to be part of an uptrend continuation where a further breakout of the $82 mark will welcome more buying opportunities. However, if price does not drop below the $82 mark and instead we continue to see a transition into a trend continuation pattern where the $82 mark becomes a platform for a potential uptrend continuation, then a breakout retest of that consolidation phase will welcome another opportunity to buy. So it's a very simple setup here on the US All Sports. So our center of focus for this week is basically around that $82 mark. And trust me, I will be with you in the comment section after monitoring our price participant in the market will be reacting to that level during the early hours of the new week. If you found the content helpful and useful in making your independent trading decision for the upcoming week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you will always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.